I'm sure you've heard the news. The markets were hit like a lightning strike. In moments, a routine day for investors was shattered by a seismic headline. Phones rang, traders scrambled, and the world's financial centers braced for impact. Elon Musk, the force behind Tesla and SpaceX, was reportedly planning a $10 billion relocation, shifting the core of his empire. This wasn't just bold, it signaled a shift in global business winds. Billions in assets and ambition moving from China to the Philippines. For the Philippines, a surge in jobs and relevance. For China, questions about its future as the world's factory. If true, this is a geopolitical earthquake. The tremors would shake alliances and rivalries across Asia, forcing governments and corporations to rethink their strategies. The implications: a realignment of global supply chains, challenging the economic order of the 21st century. The ripple effects would touch industries and consumers worldwide. Is Elon Musk about to disrupt the geopolitical landscape itself? The aftershocks could redefine Asia's economic map for decades to come. What does a $10 billion asset move look like? It's a question that goes far beyond the simple act of shifting money from one account to another. When you're talking about assets of this scale, you're talking about a transformation that touches every corner of a global business. It's far more than a bank transfer. It's a logistical and strategic feat involving months, sometimes years, of planning, negotiation, and coordination across continents. We're talking about relocating advanced robotics, entire assembly lines, and highly specialized tooling. This could mean physically moving the heart of production, key components and machinery, from China to the Philippines, a process that requires precision and expertise at every step. Beyond machinery, entire R&D departments and their top engineers could be on the move, along with sensitive projects and data centers. The intellectual capital and innovation that drive a company's future are just as important as the hardware. The complexity is immense, especially with China's strict data laws. Every byte of information, every confidential file must be carefully accounted for and protected during the transition. Supply chain contracts would need to be rerouted, shifting from China-centric suppliers to a Southeast Asian network. This means building new relationships, establishing trust, and ensuring that every link in the chain is secure and reliable. This means renegotiating terms, vetting new partners, and ensuring quality control in a new ecosystem. Every detail matters, from raw materials to finished products, to maintain the standards customers expect. The goal? To build a parallel supply chain that's less vulnerable to geopolitical risks, one that can keep the business running smoothly no matter what happens on the world stage. Most crucially, intellectual property, patents, trade secrets, proprietary software would be legally transferred to shield them from regulatory risks. Protecting these assets is essential for long-term competitiveness and survival. By relocating these assets to the Philippines, Musk's companies would build a firewall, protecting their crown jewels from shifting political sands. It's a bold move, but one that could define the future of global industry. Expect any announcement to focus on supply chain resilience, building robust, flexible operations that can withstand global shocks. The message will reassure investors and partners, emphasizing long-term stability. The pandemic exposed the risks of relying on a single country. Companies now prioritize diversification to avoid future disruptions. This shift is about prudent expansion, not abandoning China. New markets ensure business continuity while maintaining key relationships. The Philippines offers lower costs, business-friendly policies, and government support, making it an attractive alternative for manufacturing and services. Southeast Asia's booming market means faster shipping, tailored products, and access to a growing middle class. Companies will invest in the Philippines' young, skilled workforce, partnering with universities to drive innovation and growth. The focus: resilience, cost, market access, and talent, ensuring sustainable growth and shared prosperity in a changing world. Beneath the official story lies a high-stakes geopolitical chess match. With US-China tensions rising, shifting assets to the Philippines aligns Musk's interest with Western policy and reduces risk. Tax incentives in Philippines' special economic zones offer major financial advantages, allowing for global profit optimization. Legal risks in China, Data laws, regulatory crackdowns, IP theft make relocation a defensive maneuver. Moving R&D and IP to a Western-aligned legal system protects the company's secrets. The move also gives Musk leverage signaling to Beijing that investment can leave if not treated well. It's a power play, negotiating better terms in China and shaping policy in both countries. This isn't just reaction, it's proactive strategy. Moving $10 billion in assets is a marathon, not a sprint. The process would start with selling some assets in China, often to local partners, to generate capital and comply with Chinese law. Funds would flow through international holding companies to build new Philippine facilities. Intellectual property would be legally transferred out of China, creating a firewall. Regulatory approvals in both countries are critical. Any misstep could delay or derail the move. Key personnel would be relocated with attractive packages and support, while a massive local hiring and training program ramps up in the Philippines. Success depends on blending transferred expertise with new local talent. Why the Philippines? Its strategic location at Asia-Pacific shipping crossroads offers logistical advantages. The country's young English-speaking workforce is a major draw for high-tech industries. The Philippines produces skilled engineers and IT professionals, creating a deep talent pool. Special economic zones offer tax holidays, duty-free imports, and streamlined procedures, billions in potential savings. The government actively courts foreign investment, making the business climate attractive. Geopolitically, the Philippines' alignment with the US provides stability and predictability for American companies. This reduces the risk of assets being caught in great power competition. For Musk, the Philippines is a safe harbor in turbulent times. A $10 billion investment would be seismic for the Philippines, creating thousands of jobs and transforming local economies. Infrastructure would rapidly improve: roads, ports, power grids, benefiting entire regions. The presence of a global tech giant would attract more companies, building a vibrant industrial ecosystem. But the boom brings challenges: rising costs of living, gentrification, and potential displacement of residents. Local services could be strained, requiring careful planning. Environmental risks, industrial waste, water use, emissions would demand strict oversight. The challenge balance economic opportunity with sustainability and inclusivity. China won't watch $10 billion walk away quietly. Expect diplomatic pressure, reminding Musk of China's market and past support. If that fails, regulatory actions could follow. Surprise inspections, customs delays, tax audits, negative media coverage and support for domestic competitors could erode Tesla's market share. Legal challenges might block asset and IP transfers, citing national security or contract breaches. The goal: make the move as painful and costly as possible, warning other multinationals. China wants to show that leaving comes with a price. A move of this scale would send shockwaves through the global economy. It would validate the China Plus One strategy, encouraging other multinationals to diversify supply chains. The Philippines could become a central node in a reconfigured global supply chain, elevating its global stature. For the US and allies, it's a strategic win. For China, a loss of leverage. But rapid decoupling risks global fragmentation, higher costs, and stifled innovation. Tensions in the South China Sea could rise as China reacts to increased US corporate presence. Is this the end of hyperglobalization, or just a new chapter driven by geopolitics? What do you think? Is this a brilliant move or a reckless gamble? Let us know in the comments and subscribe for more.